Good afternoon, team. This is Isaac with your Mortgage Minute. I wanted to just kind of shoot from the hip today and talk about what's going on in the market. We are seeing that interest rates are pricing in a rate hike at the end of the year. Personally, I don't think that that's going to happen, but that's just my own opinion. The reason why is because Warsh, the new Fed chair, is here to be an anchor to rates, and I believe that they're going to be anchoring rates throughout the rest of the year. Our inflation reports are pretty bad, but on top of that, our job market is on fire. On fire. We had like 172,000 jobs with like I think 80 or 90,000 jobs expected. It's looking like we're in a much better or stronger economy than we thought. Our job market has been increasing throughout the whole year, so we are in a better position, basically saying, yes, there's inflation, but the United States can pay for it. So, yes, the gas is higher, but they're saying that you can pay for it. Now, a lot of this pain is being felt by the top or the bottom 15% of earners. The top 85% of earners are just paying the gas. They're paying the extra fees. They're making the amounts of income to offset whatever it might be. So, even if we're getting turmoil through the Middle East, or we're seeing issues that are coming from the Middle East, it's already kind of been digested by our market, and we already consider these costs in our daily lives. There's a huge conversation over what AI bubble we have, and in my opinion, that bubble isn't going to burst. If it was like, let's say 2008, if you wanted to compare that to the financial bubble, we're probably in 2006 or 2005. Okay, so it would still take a few years for us to realize that, and the way that I think that we would realize that is if hardware caps out. And what do I mean by hardware? Hardware is memory and chip makers, those that create the hardware for AI. That is where I believe once we see the top of it, then we might see something coming towards the market that would actually harm it. Now, the reason why I think we're seeing a bunch of major IPOs happen, like OpenAI, we have SpaceX, as well as Anthropic going public, is because there's not enough liquidity in the market that there used to be like last year. So what they're trying to do is draw money from normal investors like you and I, who invest into the stock market, and then there it is. And so they want to basically take advantage of fundraising to its max. And so that way they can now build more data centers. More data centers means more chips. More chips means that they're going to be funneling the market. And if, for example, the S&P 500 has increased about 13% this year, but the only reason why that is because of AI-related stocks. Now, there's a lot of memory also besides the chips that need to be built out. So things like SanDisk or any of that, they're the ones that give a lot of memory to these MLLs, and they're allowing the brain of AI to have a lot more space, so that way they can work well. So I said a lot of that so that way you understand basically my thoughts on why interest rates won't be coming down, and why they're saying that it's going to be something that we can afford for now because of the AI-related investments from the top. So, to summarize this, interest rates are projected to go higher towards the end of the year. I don't believe that's going to happen because Warsh. And then we also have a great jobs market, right? So if we have a great jobs market, there's no reason to lower interest rates because we got to fight off inflation. If we had a horrible jobs market, then we would lower rates to support the jobs market. Okay, so that's kind of what's happening right now, and the reason why we can afford it and we haven't lost the economy is because of the AI boom. So I don't think that the AI boom is going to end this year at all. In fact, I think that it's getting pretty ignited by these offerings, the initial public offerings that are going to happen from these three companies. And it's all AI related. And a lot of it is building out these data centers, which needs and requires lots of hardware. And that is my opinion on the whole matter and what I would like to impart on you, so that way you guys know and are aware for real estate. What does this mean? It means that we're going to have moments of volatility where you can take advantage of lower rates for the day, but understand that those are going to be fleeting. I don't believe that we're going to be lower than 6% in a conventional loan this year. Right now, we're pricing them in from anywhere from 6.5 to 6.9%, depending on your FICO score and down payment. And we're having these real stagflation issues for everyone who's looking to purchase at the moment. So it's not something that is the greatest news, but it is something to understand, so that way you can explain to people, hey, there's lots of great deals out there right now. There's lots of good stuff that we can get into. There's less people in the market, and it's harder to purchase a property when rates are in a better position because you have a lot of competition. So that's what it means for real estate right now. We'd love to see you at Power Prospecting every Monday. We give leads on your behalf. We target an area that you want to work in. We make sure that they're qualified buyers, and also if they're sellers with equity, they purchased the property 10 years ago with plenty of equity or whatever that might look like. And then we give you their phone numbers, so that way you can get your sales reps in. That's Monday at Redondo's office. Please come see me. We'd love to have you there. On Funnel Fridays, which is this Friday here in San Pedro, we build websites and landing pages, connect them to your CRM, so that way you can put your contacts into an email drip campaign and stay in front of them throughout the year. This is something that will build a strong foundation for your business. And I think I lost it. Okay. Strong foundation for your business. And this will allow you to, once you get a contact from an open house or on your phone or meeting people throughout the day, you'll be able to put them into your CRM, and so that way you can stay in front of them 6 months, a year from now, when they're ready to make a buying decision. They think of you because they've seen your newsletter, they've seen your email explaining something about purchasing or refinancing or whatever the case may be. If you guys have any questions of that, please feel free to reach out to me anytime. It was lovely speaking to you today. I know we ran a little further, but this is the state of the market right now, and I just really wanted to impart with you my knowledge on it. Have a great rest of your day, team. Call me for anything.